Hey, welcome back to another episode of Johnscryptotherapy. Today is going to be a short, precise video on Omi. Let's get started. We're going to have a good time here. So first thing is first, I go into the charts on the 4-hour. I always want to look at country, city, then street. I always want to go from a higher time frame to a lower time frame bias, okay? So first off, we're in the 4-hour time frame. I already highlighted a good area for a fair value gap. So when I'm looking left of structure, guys, this is going to be my FVG. FVG basically is showing me that there's a lot of selling pressure until we break above the structure of 0.000810, okay? So for that time being, we're in that bias towards the sell side. Now, when we look at this structure, we have a lot of internal gaps in the market. Internal gaps, especially on a higher time frame, needs to be filled. You can see here, we fill the gap right here. And then we also fill the gap here once price broke back towards the upside. This is great confidence that we need in the market. Reasons why the gaps need to be filled, because the price will eventually do it. It's better to do it earlier so it doesn't really bother you with your structured trading. Okay, so let's go back in towards the idea of what we're trying to do here. Once we're looking at this, we are looking for this push towards the upper region. And we also have an FVG on the bottom. This is a pressure move towards the upside. Why is this very important? So here, guys, I do have a delta ladder indicator right here. This is very important, especially if you are a volume trader. Delta volume ladder is telling me there is a lot of differences in the market. And I want to talk to you guys about this. So take a look at this. This one is 650,000 roughly, right? And then this is 2 million. If you look at the price of the candle right here, this is selling pressure, which is absolutely accurate, which is good. Red candle, red pressure. So we're seeing prices going towards the downside. But when I'm looking left of structure, the next candle is a bullish candle with bearish pressure. What does that show us? That shows us the content of the sellers, that they're really trying to push the price. But even though they're trying to push the price, the body of the candle closed bullish. That is a sign of weakness to the sellers. So that means the sellers are really weak in this area. This is where price structure traders will go to a lower time frame to look for higher probability trades towards the upside. Once again, I want to take a look for a short-term trade towards the upside. So we are going to go to a lower time frame for that structural trade. The other thing is I want to make sure I take my profits before this fair value gap towards this region at 0.00079. So we are in a bullish fair value. We are also on the top of a brinks of a selling fair value gap. So you want to take that trade just before, because that's where the pressure of sellers are located. Internally, we can use other charts like a footprint chart to look for imbalances in the market to take your internal structure trades. But let's just say you don't have anything, you just have TradingView, and these are the indicators or the systems that you have. So we're using a delta volume once again to look for the internal structures volume. This right here is supposed to be a selling candle with 2 million pressure of sells, but we do have a bullish candle telling us that the sellers were trying to sell the price, but the buyers came back with a new offer to push the price up. This is great for us to know. Now we're going to go to a smaller time frame. So once we're in a lower time frame, let's break it down and do it again. We'll repeat the cycle over and over again, guys. So right here is going to be my fair value gap. You see prices in that bullish rejection zone for us to continue price towards the upside. And we're seeing a bearish candle with high bullish volume. So right now, I would still wait for us to see that transitional move. But let's just say you're impatient and you're looking for that trade because you're looking for that internal move right away. If you are impatient and you just watch my videos just to take trades, I will still look for a buy side opportunity regardless, okay? Next candle, I would wait maybe for a bullish candle with high volumes of bullish pressure to give me that confidence that price is trying to go higher. So once again, I want to wait for the 5-minute candle to close for a better bias. But let's just say you're impatient, you're looking for that trade, and I want to show you what you can do. So if we enter this trade right here, I want you to understand one basic comparison. Once again, I'm going to look at structural bounds where the price can go to. And you can see here, once we're looking at these ranges, let's take a look right here, guys. There is an internal fair value gap. So what does that mean? Before turbulence, before we land into the landing strip, this is what I teach in my course as well. This is the landing strip right here. We want to land our plane safely in this course. But the problem is we found out in the radio, we have a weather, a storm. And you noticing there is a storm, a great pilot will be someone that lands the plane just before. So this is the idea I want you guys to understand. You don't take profits just at the fair value gaps. You always do it just before. So looking at this logic right here, we do have an FVG on the higher time frame located in this strip right here. This is our major take profit. Doesn't mean it's not going to go there, but we also need to understand there's multiple taking profits on the way. So looking at the structural trade right here, we want to take a trade towards the upside. Looking left of structure, where's my fair value gap? That's the closest to where price is. You guys can see it's located at 0.000788. That means there's a high probability we want to push price towards this region and take that trade right there. You can see we are making somewhat of a channel, and we're respecting that channel. So I want to see prices holding this level before prices push towards the upside. And if there is any kind of build of a flag formation, I want to see a rejection off of the top, then break the bottom to get sell side before we continue down. And if the higher time frame is a buy, I want to make sure no matter what, every other time frame going lower, I'm not looking for no sells, and my bias will strictly stick to the buy side opportunity. Taking my first take profit at the first fair value gap, then we're seeing if prices break towards the upside, we're having a high probability, once again guys, that price is going to go to this range. And this is how you use different indicators or volume purpose indicators to give you extra confluence. Do you need it? Absolutely not. But can you use it for a better opportunity trade? Yes, you can. And this is how I make a lot of money in the markets. I come to the trades, look at my higher time frames, work my way towards the lower time frames, look at the delta volume to find imbalances or divergences in the market, take the trade towards the upside, make sure I have a runway safe for landing. But if there is a storm before the runway, move your stop loss to break even or let it be a trailing stop loss. But please make sure, the one most important thing, take some profits off the table. Other than that, guys, remember, it's not financial advice. This is my advice. And hopefully you enjoy this video and how quick and sweet it is. If you guys do like that, please make sure to like, share, and subscribe. Take it easy, and John out. Peace.